Now, you've been directionally right on a number of other big stock bets, including Teladoc. This is your largest holding in the Genomics Revolution Fund you run. It's also a big holding in the Innovation Fund. It's up about 40% this year. It's got a $40 billion market cap right now. This is telemedicine. Is telemedicine really going to continue to shine once COVID recedes?
Well, we had a great opportunity to buy into Teladoc when the stay-at-home stocks were starting to flatten out as the vaccine was on the horizon. Teladoc was one of those stocks, and it then was hurt by an acquisition it made, Livongo. This is a beautiful acquisition for Teladoc. The most important variable, again, I'm going to come back to AI over and over again, because we think that is going to represent $30 trillion in market cap during the next 10 years. And we are just beginning. So with Livongo, Teladoc now has one of the best artificial intelligence teams and some of the best data. That's the other thing we'll come back to. Most data, best quality data. And we think the combination of Teladoc and Livongo is going to be a powerhouse. One services more the acute setting in medicine, and that would be Teladoc itself primarily. And Livongo is more involved on the chronic side. So chronic conditions, kidney conditions, mental health, and so forth. So we believe that with this data, these two companies, now that they're together, now that they put their AI teams together, are going to be able to help make the healthcare ecosystem better, cheaper, faster, more productive, more creative. What we say about all kinds of innovation, they're in a beautiful position to do this.
Cathie, it's not just Teladoc. This is Scott now. It's not just Teladoc out of your signature innovation fund that has enjoyed spectacular gains over the last year. I'm looking at the list of your top holdings, whether it's Spotify or Shopify or Zoom Video, for example. The gains have just been tremendous. I'm wondering what happens when we get on with the rest of our lives after COVID, and how do you think about taking profits, even though I know your typical sort of outlook is a 5-year time horizon? It doesn't mean you can't take profits every now and then and redeploy capital elsewhere to some of the laggards, perhaps. How do you think about that?
Sure. Well, the last year has been instructive. During the coronavirus crisis, we consolidated to our highest conviction names, especially those that were tormented by, I would say, algorithms who were looking for small cash cushions and cash burn. And so we had great opportunities to buy stocks at a fraction of the cost from just a month earlier. Certainly Invitae and Zillow were two of those stocks. And then they've had magnificent runs. Many, Square would be in this category as well. Many are up 5 to 10 times. Tesla is also in that category. There was a lot of fear about its condition. And then what you saw was the stay-at-home stocks start to flatten out. So toward the end of last year. So some of the stocks into which we had concentrated our portfolios, they were up, as I mentioned, 5 to 10-fold. We started moving back into these stay-at-home stocks because it seems to us that many analysts and portfolio managers believe that after the vaccines make it through our population and the rest of the world, that these stocks will be done. We actually think that innovation makes the world a better place generally in the ways I described earlier, and that the coronavirus has accelerated the shift towards these new ways of doing things, these new ways of spending time. So we were happy to get the reprieve in some of these so-called stay-at-home stocks in the last, I'm going to say 6 months. It really started in July, August, giving us time to move out of some of the names that had taken off and into those that were marking time. So that's what we do. We are considered a liquidity provider, which means When people are selling, we will be buying. And when people are buying, and these are investors and retail and institutional, we are likely to be taking profits, as you say. Taking profits is never a bad idea.
But can you envision owning, for example, a Zoom in 2 to 3 years? Or will you have moved on to something else because the world has changed?
Well, I think the world is changing because of Zoom. And I think we're going to be working very differently in the future. Sure, there's going to probably be a combination of in the office and stay at home. But now we know it's possible. We look at Zoom in the context of the tech stack. And if you look at the tech stack, the enterprise communications layer is the biggest. It's a $1.5 trillion layer. This is where Zoom is playing. And they're starting to add features to their services. And I think all of us will agree, my experience with Zoom is it is the best platform for video, is the easiest user interface. And I do believe that it will pull